understanding technical analysis combined with fundamentals really can really give you a major edge, and I think a lot of people in the retail space are very, very innovative and are really looking at a lot of new ideas and creating a lot of new systems when it comes to trading. That I think it's I think, they may rail against technical analysis, some fundamentalists, but I think they're keeping a close eye on it and realizing that there may be something to this technical thing. Right. So whether they'll ever admit it or not, but I like to believe that it's the best way to go about it is a combination of both, not one over the other. Okay. So that's just what I think. Ryan, what are your thoughts on that? Because you've been doing this for quite some time now.
Yeah, man, I'm in agreement with you. I definitely think that some folks are starting to come around to this technical thing might have some credence and really be able to give some additional insight into what we see. So the systems that are being developed are phenomenal, and it kind of plays into that statement as well, right? And they're starting to look at the charts more. And the beautiful thing about how we look at it, you see the Fibonacci sequence plays right into these key levels from a higher time frame, monthly, weekly, and daily. So as we get to these levels, you see those patterns start to play out over and over and over again. So, but I'm in agreement with you, man.
Yeah, I think so. It reminds me of working in education for forever now. On the corporate side, professional development side, traditional side, career college side. I remember a time when this whole online thing was taking off, it was really driven by the for-profit education sector. And there wasn't like a chancellor in the world on the traditional side. You have to be in the classroom. You have to be in seat. You don't get the full value. And now look, right? Now look at the education. So it's like sometimes, and I think of it like retail trades, like sometimes like for-profit is kind of like the guinea pig for trying new ideas in education. At least that's how I saw it from my perspective after working in it for so long. Where people rail against it at first because people don't like change, right? People aren't fast to change. But eventually, right, there's not a university in the world, traditional university in the world, that doesn't have some form of an online platform. So eventually people evolve. And I think that's really what's happening in the trading space, because some of the traditional norms are being broken and people are having some success. So I definitely look forward, to the future and what it looks like in regards to trading. So definitely, I'm going to mark this monthly high again. As price broke above it and came right back below it, and that's just a key level anyway. As we look left here on the chart, to where we've gotten a reaction in the past. So I'm gonna keep that level in there. Get down to the weekly, like so, and we don't have this market map. So I take it as a zone, just like this. That, and got this way down here where we're gonna take. Okay, and your support and resistance levels, right? Levels in the past where price reacts, right? It has the potential to do it again. Okay, so we are going to leave this just like that. All right, so let me take these support and resistance levels off. Okay, all right, so this is the monthly and the weekly levels that we have on this eurojpy, and you can see, like, right, we're coming into some key spaces, right? Getting a correction, possibly then a continuation afterwards, okay? Because it's still keeping that bullish momentum on the euro, okay? Because we're still looking at expected rate hikes to continue, right? For the ECB. Okay, so we're still fairly bullish on the euro. Okay, now we could see corrections in the euro if we have a continuation of growth concerns, then the risk sentiment starts to sour and things like that. But for the most part, we are bullish, especially against the yen. So let's link. So once we mark these monthly and weekly levels, we are going to link it down to the daily, and we are going to start to do our due diligence, right, on the next time frame. And so we zoom out, and we can see here that we have a daily high that creeped in, like so. We'll leave that one out because that's in between our zone anyway. And I'm going to mark this because that is a major U-turn, like so. And we're going to link, right-click, link that down to the lower time frame. What support levels do we have? We are currently at a support level. Stochastics in the buy zone. Okay. And we are going to take these away. And let's zoom out and find the low and work our fibs and see where we are from a daily fib perspective. All right, so we're going to take it off this low. Okay. See that this A got taken out, find the next low. Right, because our bias is to the long side. This fib got taken out, so now we're looking at this impulse leg here. There. And we can see that we are overall long, okay? Everybody see how I did that? Drop me a 1 in the chat. Because if you can start to get to this point consistently, right, and now you know where your spots are, your zones are, you know, you can really you can do some damage in the market. Carolyn, I would happen to agree with you on that. All right, people are becoming more aware of trading, and trading, not only trading but just investing in general and making money from money. Right? And how to make your money grow and how you can scale your own personal economy. Right? Where, you know, a lot of times we just know, hey, to make money, we go to work for it. Right? But how do I take that money and make money from that money over time? I think it's the final frontier for a lot of people. And it is causing a lot of people to think twice about, you know, labor and how they look at work. For me, I love work. I love doing something right with my time. But I just, now that once I learned what to do with the money, it actually gave me peace of mind. It's like, okay, hey, I know where I could park this money and have it continue to grow. So if I don't want to work forever, I won't have to. Right. So because work, you know, especially if you're doing what you love, work can be very fulfilling. You know, work for a lot of people gives people a sense of purpose. You know, my key is that if you learn how to invest your money, a lot of times it can allow you to transition into doing something that you really love and that you have a passion for, because you're not tied down to a job that you don't really like and you prefer not to do. You know, so all right, so let me move down EuroJPY. We're going to move down to the 4-hour. We know that we are bullish. So when you're doing this through the time frames, you can right, mark long-term target. So if I have a 61.8 pullback, that was my low price on the daily. If I have a 61.8 pullback, I know that my projected daily D extension right now is the 1.618D extension. Okay. So if this is going to continue long, we look for it to continue long to a long-term target that is currently upwards of over 1,100 pips away, almost 1,200 pips away still. Now, that was our established low price. Now we could be establishing a new low price, right? You see the pullback and the correction to the zone at 146.30. Do we take off from here and continue along our bullish trend? Well, let's see. Let's move down to the charts and see what we have going on. Okay. Because we saw that risk sentiment shift to risk off, but it's been going back and forth all year. So I'm not convinced yet that, hey, it's time for that major downturn, for the sentiment to go sour for quite some time. It seems like the markets are they just continue to be resilient and bounce back, over and over and over again. So hopefully that continues. So here we are on the eurjpy on the 4. Okay. We are starting to find some support here at this 382. Okay. For this bounce. Now, if we're running off this 4-hour chart, okay, then eventually we may see, right, a bit of a further correction. And I called that a 382, but that's a 236, right? So we can see it continue to run long, or we can see it push deeper, okay? If you are a bull, okay, you prefer to see this price move lower, okay? We'll see coming into next week how that price continues to react off this support level. We got a stochastic that's overbought on the 4-hour. There's that D extension there. Okay, that's that daily D extension. Like so. So this is the daily 0.618 D extension. So what you have to say to yourself, right, if you're trading off this 4-hour chart is, if my trade plan calls for me to trade at a 61.8 or deeper, then this is not my play, right? This play off this 236 is not my play, right? That's what we have to think about, okay? So we may see a push long, but if my rules are I trade off the 4-hour chart, and for me to buy, I need a deeper correction, then you have to wait, okay? Any questions on that?
No.
No. All right. So I'm gonna take it to the 1-hour because I'm gonna see if we have a smaller wave that maybe try to move up and test this 148.60 level. So if we zoom this 1-hour chart out, we can see where we're finding this support 1, 2, 3. That's the stochastic though is also in the sell zone. So let's run it back, bring it forward. Let's see where we come out. Different pair, same thing. There. Brings us back to the past 80-20 that we played. This stochastic's in the sell zone. If we break this 146 level, we may be heading to take out that A and turn it over, right? So this is a beautiful 80-20 play here. Right? Very nice. $80-20. Okay. So if you set this up, right, when you see Ryan post a setup, right, he'll give you, right, your zone, like so. It's the same thing, okay? It's just a matter of seeing it. Here was the zone. There. And here were your TP levels. All right. Down to that 382. If you did it, that's a 2-to-1. Is that 130 pips? Okay. So 130. So we're looking for 260. On there, 147.99 or so. 260 over that. And you can see that you would have gotten that, right? Okay. That's without worrying about your 382 targets. 61.8 targets. Just, hey, on players a straight 2-to-1. I divide my risk percentage by my stop loss. That's going to give me my lot size, and I'm just going to let that trade go and do its thing. If it doesn't hit the D, I'm looking to try to get that 260 to the downside. Does that make sense to everybody?
Yes.
Yes.
Okay. Okay. We're always, me and Ryan talk multiple times a day, you know, trying to, hey, what can we do better? How can we really help people figure this thing out to where it's not difficult for people? You know, it's not a hard thought process, right? Once you get the fundamentals down and how to market your charts, like how can we make this as simple as possible? Because you want to keep it as black and white as possible. Right? So that would have been your setup, and you would have made your 260 pips. Right? And stop right. And so when you talk about stop losses are small or large relative to your risk to reward, right? So you say, well, that's 130 pips. That seems large. Well, your TP is 260. So a 2-to-1 is a 2-to-1. I hope that makes sense to everybody. I hope it makes sense. Brian, does that make sense? I hope so.
Yeah, absolutely, man.
Right. So it's just like, you know what I mean? Like, is it if I'm going for 30 pips, is a 10 pip stop loss wide? You know what I mean? And so it's all relative to what type of target you're going for. So a 2-to-1 is a 2-to-1. Think about it, if I'm risking 1% on that trade, 1% is 1%. That's the beautiful thing about dividing your risk by your stop loss. Okay. So whether that's 75 pips on the stop going for 150, you know, or 130 going for 260, 1% is going to be 1%. Makes it very, 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 very simple. So that's the EJ. So we're kind of just waiting right now. I don't know if that's going to, based on that 4-hour stochastic being in the sell zone, the 1 hour's in the sell zone. I think, hey, if we break that key is at 146.30. If it breaks that level and we don't get higher highs, higher lows, we're going to continue to retrace within this boundary. Right? We may get a deeper retracement, which that's cool because I'm overall bullish on the euro yen anyway. And if we get that low price in the zone, definitely be looking to get long. So I'm going to wait on that.